Gentlemen, good to have you both. So Jerry, is Walmart management to blame for mismanaging inventory or a broader problem?
No, I have to say this is a broader problem. There's a tendency to say, oh, we heard this from Target when they warned, so it's more of the same. But there's a lot of new information here. Remember, Target's warning was 7 weeks ago. Meanwhile, it's kind of an open book exam. Here's the retail sales report for June. And guess what the two worst categories were? Apparel and department stores. And what was the best? Grocery. So it's exactly what we heard from Walmart. It's an underlying trend across the whole economy. It's not just Walmart, and it looks really sad for the rest of the year.
Mark, you say it's old news, though, right? Why?
We think it's a bit backward looking. Our survey work says the consumer is actually getting a little less bad. I'm not saying it's getting better, but we're saying that our survey work shows that we actually show discretionary spending intentions remaining positive. Importantly, I think from a consumer standpoint that goes to Walmart, those lower income consumers, those making less than $75,000 per year, we actually saw sequential improvement in the purchase intentions amongst those. It was actually the first time we've seen that since the war in Ukraine broke out and inflation got a lot worse. So again, we're not calling victory here, but I think we look at the result and say, hey, look, this is a bit backward looking. We saw inflation rise through the quarter. Obviously, gas prices had a huge impact, especially if you think about the lower income consumer. They're off of highs. I mean, still relatively speaking, 15% off of highs with 35% up year on year. And I think, too, that Walmart, back to the previous comment, probably had no choice but to do this because Target basically said in early June that they're going to start marking down a whole bunch of that inventory, general merchandise, apparel, things like that, to kind of force Walmart's hand. So both of those companies were just extremely heavy coming out of first quarter, and I think needed to do what they needed to do to get inventories in a better spot, which they've effectively promised to do by end of the next quarter or so.
Nobody's looking at it like that, Mark, as a sort of backward looking. They put out a warning at intra-quarter ahead of their quarter release. I feel like this is as fresh data as it gets when it comes to what we're seeing on the consumer.
Well, I guess if you look at how Target stock has traded since the release in early June, it really has just bounced around but hasn't gotten worse. I think the expectation at that point probably increased that Walmart would have to do this. So there's probably folks out there waiting for Walmart to, in fact, do this. I think the underperformance in just the overall market today hasn't helped. But Walmart stock opened down more than it is right now, and it's kind of hanging around as the market's getting weaker. So, directionally, that might tell you, too, that folks kind of think we're to a point where it's not quite as bad as expected. They alluded to performance going forward in the release is saying back to school while early is off to at least a decent start.
Good, yeah.
So I think that's something to be seen. So not a disaster in our view in terms of where we are from a consumer standpoint. Obviously, I think the companies could have done a much better job of both purchasing and managing the inventories earlier.
So, Jerry, what do we make of it then as it relates to the consumer picture and the overall economy? What does the Fed take away from this?
I'd like to be optimistic about the future, but having run multiple retailers, you don't put out a warning like this unless you're pretty certain it's going to be a big problem. And, it's very unusual for Walmart to do something like this. They have their earnings report coming out shortly. To do this a few weeks ahead of that, they're seeing a problem that's continuing until this day. And so I don't think it's getting better. The only way the Fed can halt this inflation, which is, a consumer-driven event, is by putting a stake in the heart of that vampire, and that's what they're going to do. And every piece of data about clothing sales is negative. Certainly, there's some very high-end retailers who have done fine during this period. But the one thing we all know is that the strongest correlation for high-end sales is performance of the stock market. And so if the stock market continues to perform poorly, then even the luxury customer is going to be affected by this, and we're going to see the same pattern. Meanwhile, groceries, we heard today from Albertsons, again, fresh news. They're thriving, they're growing. Grocery is growing. That's what Walmart said as well. This is a pattern we've seen before. Consumers are flocking to necessities with what money they have left. Of course, if you have more money, you can still spend on some discretionary items, but that bar starts to increase as the economy does worse. And I'm, sad to say, I think that's what's going to happen here.